Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Nina Mishra. And we brought you two well-known big cap companies. One is in travel. The other is in almost everything, things we're using every day, technology, social media, video streaming, and AI. So what are these stocks? Well, I'm going to start with mine first. I'm doing the travel stock. Yeah, I'm doing Royal Caribbean, ticker RCL. Yes, remember the cruise lines. Remember what happened during COVID? It wasn't a good time for them, but things have turned around. And now Royal Caribbean is out there talking about how good their quarter is, how spectacular the bookings are. They're seeing record bookings, and also how strong the consumer spending is on board the ships as well. So cruising is back, and I know many of you like to do it. And remember, Royal Caribbean has several different brands. It has the Royal Caribbean brand, but it also has Celebrity and Silver Seas. And the company is saying all three are doing well, and all of its destinations are doing well globally. It has 65 ships now, so it's quite a big company. And odds are one of you have probably been on a Royal Caribbean cruise at some point. And now you're paying full price to go on them again. So what do the numbers actually look like? Why do we have a Zacks #1 rank? That is the strong buy. That means the earnings estimates are on the rise. Well, after that spectacular earnings report where they did raise full year guidance, you know what that means. That means the analysts are raising their earnings estimates too. And that gets us the #1 rank, the strong buy. So let's take a look at what that looks like on Zacks.com so you can see what it looks like when a company has this kind of momentum and the analysts are all jumping on board. So let's take a look. So as you can see on Zacks.com, you can go to the detailed estimates page as I've done here. Here's what it looks like up at the top. You can see the Zacks #1 rank here, Royal Caribbean, and that it actually has a very good style scores as well, other than the F for momentum. But that's the momentum of the stock. I'm not sure why that's an F, because the stock is red hot too, as well as the business. So let's scroll down and see just what's happening with these estimates. So after the company reported earnings in the last 30 days, you can see 6 estimates are up higher now for 2024 as they did raise their full year guidance. So the analysts are all doing the same. But look at next year, 2025. They're seeing this momentum still continuing for next year as those bookings are made pretty far in advance. That's just how cruising works. You got to get in early to get your spot because the demand is so strong. So these would be people booking for next winter, most likely, and maybe even next summer. And you can see just even in the last week, 2 estimates are higher in just the last week for 2025. And what does that translate to? You can see on the earnings estimates just above, we're expected to see 59.3% growth in earnings for this year. That's in line with what the company is saying. They're seeing 60% year over year. They made just 677 here last year, expecting to make 1080 this year. But look at next year, another 16.6% up to 1259. So this is looking super bullish for both of these years. What does it look like on the charts? We can see that as well. I know many of you are visual type of investors. So here's what it looks like for Royal Caribbean. Not so great in 2021 as we still had all those COVID restrictions. Remember the testing. Remember some outbreaks on the ships. Nobody wanted to go on cruises. It was real pain. So earnings collapsing there. Estimates had to be kept being cut. But even in 2022, still a lot of weakness. We did see some of the recovery here in 2023, but it's really this year and next year where the analysts are feeling comfortable that the consumer is returning. Now, this could all change if the employment scene changes in the U.S., but for now, consumers feeling well enough and they're working and they have some extra cash. They want to take their vacations, and cruises are still at the top of their list. It is back. And you can see the shares here, like I mentioned, hitting is new 5-year highs. It is at new 5-year highs, busting out. But what does the valuation look like? It's still pretty cheap because those earnings estimates are on the rise. So it's trading at 13 times, no dividend because of, the issues that happened during COVID. They're just trying to stay in business, hoard that cash, grow that cash position here as the company continues to recover over the next couple of years. But I'm liking what I see so far, and you should too on the travel side. So this is Royal Caribbean, ticker RCL, with a strong number one ranked strong buy going on right now. So I'm turning it over to Nina with her number one rank strong buy. It is a name we all know, and many of you own it. She's going to talk all about it after this.
Thanks, Tracy. I'm Nina Mishra, and my pick today, my top pick of the week is Alphabet or Google. So it's a Zacks rank number one strong buy stock currently. And let me share my screen to show you why I like this stock currently. So, as I said, it's a Zacks rank number one strong buy stock. D for value, B for growth, D for momentum, and C for VGM. And we will discuss why those scores. So let me show you a presentation too. So Google reported excellent quarterly results recently, beating on the top and bottom lines. And it reported very strong growth in its core advertising and cloud computing businesses. And cloud computing businesses in particular were boosted by AI solutions. That's what Google management said. And advertising also improved with a lot of strength in the YouTube advertising. The company reported strong and improved cost controls, which also boosted the bottom line. They continue to invest heavily in AI. In fact, they reported that during the first quarter, they invested $12 billion in capital expenditure. They had capital expenditure of $12 billion, which was up 91% from the same period last year. And they are spending a lot on the AI infrastructure, data centers, etc. But what investors loved the most was that the company announced its first ever dividend of 20 cents a share and additional $70 billion for share buybacks. Now, Google has been investing in AI for years. It was always seen as an AI leader earlier, but they always took a cautious approach to AI technology, and CEO Sundar Pichai has talked about that many times, and that's why Microsoft, with their partnership with the OpenAI, they emerged as an early winner, but don't rule Google out as far as artificial intelligence is concerned. They are an AI powerhouse, and I'm sure that we will see more products and solutions from Google in the coming months and years. And AI trade is just beginning, and the race is going to heat up in the coming months and years. The stock is down slightly today because it was reported that Apple is in talks with OpenAI to integrate more AI features in its next iPhone operating system. But they will remain in talks with Google as well for Google's Gemini AI chatbot. So I think the reaction is a bit early. We will learn more about those partnerships probably next month. Now, let's take a look at detailed earnings estimates. You can go to the quote page on Zacks.com to look at these earnings estimates, and you will see that analysts have been raising their estimates for the companies since they reported excellent results. You see those 16 estimates have gone up, and you will see that estimates for the current year and next year have gone up significantly for Google since they reported their results. Now, looking at the performance year to date, the stock has in fact done well, quite well. This is for the so-called Magnificent Seven group. And of course, NVIDIA is the best performer again year to date, and then followed by Meta Platforms. But Amazon and Alphabet are almost neck to neck, up about 23 to 24%. And then Microsoft, Apple have slightly underperformed. Tesla has significantly underperformed. Despite this performance, you will see that valuation multiples, Alphabet looks very attractive, particularly on the forward PE multiple. You will see that the stock is trading significantly below its 5-year median as well as below sector multiple. On price to sales basis, it is trading below its 5 years median, and same for EV to EBITDA multiple too. So again, a Zacks rank number 1 strong buy stock with very strong presence in AI race, which is going to heat up. So definitely worth a look, and particularly in view of its attractive valuation. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week.